The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 8th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm Steve Rhodes, and I hope everyone out there had just simply a fantastic weekend. How couldn't you? All these great, well, I guess you couldn't if you were stuck in some of those nasty rainstorms that I saw taking place over the Mideast, but what a great weekend. College football, you know, the games were okay. Great game between Michigan and Oregon out there, at least for the first half, first three quarters out there, and then it was kind of a bit of a blowout there. In any event, thanks so much for joining us. Let's make sure that you and I, that we do everything to have just simply a magical and marvelous week. And for the next 2 hours, I'll do everything that I can to share with you extraordinary tools that help us identify where price is headed to. That means we'll take a look at the lightning bolt pattern, that A to B equals CD pattern. We'll look at Fibonacci expansions and contractions because the markets are doing one of either of those. We'll also take a look at Japanese candlesticks because the bulls and the bears, they leave messages for you and I each and every trading session. We'll use every tool that we've got in our tool bag out there to help us identify where price is headed to. Now, we've got an interactive show. I know I can get that out. And that means we'd love to hear from you. So you can give us a call at 877-927-6648. And we'll take a look at your stock chart out there. And let us always remember we should never, ever, ever be a prisoner of our past. Instead, you and I, we just need to be pioneers of our future. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow futures. They are trading. Switch tabs here for me. Dow futures are down about 29 points. S&P futures off about 3.5. NASDAQ down a couple of points. Let's go take a look at the futures market. We'll look at the daily charts, get a feel for where we're at as we speak right now. Let's take a look at the Dow futures. Dow futures are trading just slightly above that December 7th, the July 17th swing point out there, 17,085. They are bumping their heads up against some resistance out here, their market profile resistance. Well, we take a look at the candles out here over the course of really quite some time. Well, let's go. If you go back to August 27th, what you're going to see is nothing but a band of narrow-bodied candles out there. That's really more of a sign that a market is tired. Now, if the market decides to break out here inside of the Dow, the areas that we would take a look at targeting, where price would target, probably the top of this little rising price channel. As I pull this stock chart back here, and this is the Dow futures. And if we take a look at the rising price channel, been in place, well, I'll pull back even further. Maybe I've got it going back even further than this. I believe, there we go. This is a little rising price channel that we have going back into the October 9, 2013 timeframe. So pretty good price channel. Price has been going meandering from the top to the bottom and so forth. And right now, we're up towards the top. We're not at the top. So let's go ahead and expand this out just a bit. And if we take a look at a possible breakout inside of the Dow, the price target area, if we take a look at expansions of swing points out here, you'll see that the 1.272 expansion for the Dow would take you into the 17,323. So what the bulls are looking for is some type of clear evidence that this market wants to break. What will that be? You'd have to say some type of wide-ranging bar, moving above the 17,154 type range. If we see that, then 17,323 would be its target. But we've got some narrow-bodied candle sessions out here, and it's a market that indicates that it is tired at what basically amounts to a 100% move. Yes, you're trading above the 17,085 level. We're trading right at it, really, 17,088. So we'll see if we can get some kind of conviction one side or the other inside of the Dow. If we take a look at the Russell 2000, Russell 2000, what we know about this is it's trading really in a 10-month consolidation pattern out here. These are the blue lines, horizontal lines going across my screen out here. The bottom of the consolidation being 1075.70. The top of the consolidation being in the 1203 area. Now, if we take a look at the last swing point inside of the Russell 2000, that's off of the swing from July 1st down to the low that came in the case of the Russell 2000, it was the low on August the 1st out there. What we'll also see is that price has made a 0.786 retracement. It did that on the trading session a couple trading sessions ago back on September the 3rd. It did that. As it was doing that, it was also making an A to B equals CD pattern that it was completing. It had a bearish reversal candle at a key reversal session, all in that trading session from September 3rd. That makes that high resistance, that high being 1182.20 as we take a look at the futures contract. They close above that, and what we're likely to see would be the Russell 2000 make a run for the 1203 area, and that's the high from July 1st out there. So the Russell 2000 at this stage not really providing us with, well, the information it's provided us with is the 0.786 area can be a normal area where you would see an A to B equals CD. In this case here, it would be an A to B equals CD down pattern. What is that? If we take a look at, oh, it's not even on my screen. I have to add that. Let me see here. Maybe I've got the tool just hidden out here. Let's see. Do I have it hidden? Where is it? Where is it? Where is it? No, that's weird. Got to add it back on the screen. Well, I'll do that. I'll do that in a little bit later. Let's go take a look at the. Let's go take a look at the NASDAQ futures. What are the NASDAQ, the strong index out here? Is it providing us with any clues? And the reality is it actually is not. Because if we take a look at the expansion of swing points here inside of the NASDAQ, we're going to come from the July 24th swing point high down to the low that came in on August the 8th. The high on July 24th, that was at a price level of $39.91. The August 8th level is at $38.26. If you took the difference of those two, you multiplied it times 1.618 and added it to the bottom of the session on August 8th, that'll take you up to a price level of $4,093.07. We're trading $4,084 right now, so price has not been able to get above the 1.618 level. What the NASDAQ futures also did is they made a key reversal session on September the 3rd, a bearish engulfing. That is your level of resistance. So if the markets are going to move higher, you're going to see the Russell break above its level of resistance, its key reversal, its bearish engulfing. You're going to see the NASDAQ really do the same thing out here. And that's going to be by getting above the price point of 4,013, what is it, 4113.75 out there. 4113.75, that's your line of demarcation inside of the NASDAQ. What's the next level above that? Well, if we just simply go take a look at what our 2.0 area would be inside of the NASDAQ, let's just simply go add that in here. I don't know if I've got that on there. Let's just, we'll put that in yellow as well. So let's do this, 2.00, and let's go see what that price level comes out to. That would be the 41.56 area. So any close above 41.01, you're likely to see the, any close above 41.13, you're likely to see it move up to about the 41.56 area. That's what's going on inside of that index daily futures account. If we take a look at the S&P futures now, the ES Mini, it's trading out at 2002.75. It has made its 1.272 expansion. Now, the reason we're taking a look at, so you've got the NASDAQ at a 1.618 expansion, the S&P futures at a 1.272 expansion, the Russell at a 0.786 retracement. All these Fibonacci numbers really coming together, and the Dow, what in essence is a 100% move. These are normal areas where you would expect to see, because it's all lining up here, you would expect to see the market start to do something different. In this case here, start to make some kind of retracement. However, if you see all these markets simultaneously breaking out above these levels, everything will move on to the next floor. And inside of the ES Mini, if we go take a look at what that next floor would be out here, we'll go take a look at the 1.618 area. That's good. That would take you up to the 2,044 price range. So, and now in the case of the ES Mini out here, unlike the NASDAQ, unlike the Russell 2000, that gave us a real reversal session on September the 3rd, the ES Mini didn't. Now, In one sense, it was a bearish engulfing candle out there. But if you take a look at the two candles, meaning the prior day, September 2nd and September 3rd, both those bodies were very small-bodied candles. So it's pretty easy to create one of these reversal signals out there on a small-bodied candle. So I don't give it a ton of as much information. I would say there's more information coming to us with regard to taking a look at the size of these candles out here, these doji candles that we see, or these high wave candles that we see out here. Now, Friday was a different story. Friday was the first time that we really saw any kind of a strength inside of the S&P, the ES mini, really ever since the trading session of August the 27th out there. But price still needs to get above 2,011.73, and that's what's going on inside each of the markets for the four primary indices. If we take a look at some things here that are moving, well, if we take a look at the FTSE and the DAX, you've got the FTSE trading down 51 points. The DAX here is basically flat. It's off about $7. If we take a look at the DAX on a daily chart out here, see what it is doing. Let's take a look at its retracement level. The retracement level that I'm looking at is coming off of the high from July the 4th down to the low that was put in inside of the DAX that was on the trading session of August the 8th. It, too, is at the 0.786 retracement area. 97.89 is its number. So far, the inter-session high today has been 97.73. Let's see, the high on Friday, 97.74. So the DAX is not giving us any indication of it getting ready to move up to its next level. Its next level would be that 100% move of a move, getting back to the swing point area from its July 4th high. So it's also at one of these areas where you could start to see an A to B equals CD to the downside in this case here. Any break above, any close above 97.89, you're likely to see the move inside the DAX get up to 10,030. If we take a look at the FTSE is off 52 points right now. The FTSE out here is trading down. Let's take a look at its retracement. First, what has it done? What has it done as it's made its way up into these highs? The FTSE here is one where, if you take a look at it, it's got quadruple tops. It's got the top that was out here back on January in 2014. That's at a price level of the actual high out there was at 68.67. That high was tagged and rejected back in February. It was tagged and rejected back in May. It was tagged and rejected back in June, tagged and rejected back in July, tagged and rejected now in September as we speak. Any break above that 68.67, maybe the FTSE provides some information with regard to what the global markets might want to do out here. But right now, it has run into some resistance. It has a bearish reversal signal out here from Friday. If we take a look at retracements, what has it done so far out here? Whoops, I got the line chart out. We change over here to my retracement ruler, and let's go from the low inside of the August 8th low all the way to the high that was put out here in September 4th. And if we take a look at retracement so far, 67.61 is its dead cat bounce. It's 0.382 retracement. It hasn't made its way all the way down there. This morning, earlier, it got down to a price level of 67.73. Right now, you're trading out at 68.03. We've got Goldilocks is off $3. Silver is basically flat out here, trade out at 19.15. Our call number 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. King Dollar on the move again this morning, up about 200 ticks out here, trading out at 83.95. Let's go check in on King Dollar out here. Now, the U.S. dollar index is trading up. I've got the current contract. I need to put up the continuous so we can get a feel. Give me a moment here to do that, get a feel for where it is trading into. So we got the U.S. dollar index, and it is trading right now into that whole cluster of swing points, this 100% move right into the level of about 84.96. Now, there's a 1 to 2A to B equals CD that it's trying to complete out here. That would be out at 84.04. The actual intra-session high today has been 83.98. We'll see if, in fact, that is a level. Now, typically, when a market does a 1 to 2A to B equals CD, it's typically where you start to see some kind of a change in direction, a change in price out here. But we've got the Great British Pound. So we've had the euro tanking, the Great British Pound, the euro. If we take a look at the Great British Pound, it's one that is struggling the most right now. It is trading out at $1.61. 50. And if we take a look at this, let's first move over into let's take a look at a monthly chart out here for the Great British Pound and get a feel for. That's actually, we'll switch over to a weekly chart over here. What the monthly chart really shows you, give me a moment here, is shows you this this nice big consolidation that it has been trading in, and actually I grabbed the wrong tool out there. Oh, well, not so fast. I thought I grabbed the right tool. Let's try this one more time out here. There we go. That's it. So here's quite the consolidation pattern inside of the great. Darn it. Hold on. There we go. There's the consolidation pattern inside of the Great British Pound. So this says here, as we take a look at the monthly chart, don't pay attention to the market profiles on this. So on the monthly, we'll just do our work right here. We'll come from the swing point low. It's a little doji down at the bottom, the month of July 2013, all the way to the high that we've seen so far, which is up here on July of 2014. Now, if we take a look at retracements, this is a monthly chart we're looking at. What we'll see on the longer-term chart, we've seen a retracement below the 0.382 level. That really says that the Great British Pound, which represents, I don't know, maybe about 10 to 13% of the U.S. dollar index, I can't recall which number it is, but it's somewhere right in that range, is likely headed to the 157.42 level. That is your 0.618 retracement. So that's what the that's what the monthly chart shows us. Let me switch over, take a look at a weekly chart for the Great British Pound and go see if we've got any swing points back here. We really don't. If the Great British Pound falls below this little cluster that was formed between September 2013 to November 2013 on a weekly basis, that low, by the way, is down at 1.5855. It might, the 0.618 retracement might not be enough to actually hold the Great British Pound. We can see here on the weekly chart, this thing has moved into the oversold level out here. Taking a look at that 14-period relative strength indicator. Whoops, let's go back and take a look at, what did I hit there? Let's take a look at this on the daily chart as well, see if there's anything on the daily chart that sticks out as a level of support out here for us. And really, there isn't. So a pretty good chance that what we should see inside the Great British Pound will move down to about 157.42. If we take a look at the euro out here, it's trading out at 1.2945. If we look at what this is trading down into, it looks like the euro is going to make its way all the way back down to the lows here from July. Now, that is where we saw a fairly decent breakout of the euro. That was back on the trading session of July the 10th, 2013. That low is in the 130 range, 1.2765. What am I talking? 130. We're trading below there. So it looks like the euro is on its way to make a 100% move. Now, the combination of all that would say that the U.S. dollar index will blow through its 1 to 2 A to B equals CD to the upside out here. No bulls stepping in place yet inside of the euro. Now, this is in a extreme, I do mean extreme oversold condition on the daily chart out here. So that condition needs to be worked off at some point in time. But at this stage, we have not seen any buyers really step in any kind of fashion. That's taking a look at the daily charts out there. Some things that are moving that are going to pop as the market opens. You've got multimedia games holdings. They closed at 27.78. Right now, they are trading out at, I don't have it on this one. Let me switch over. I'm going to change that out. That is trading out at 35.73. So that's going to have a huge jump in the markets. To the downside, you've got GlaxoSmithKline. GSK is a ticker symbol. They closed at 47.92, and not a big deal. Trading out at 46.30 out here. Of course, it might be a big deal for the equity. It's trading down into its August 8th swing point low at 46.01. 877-927-6648. Steve Rhodes, TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow trading up 22 points, trading out at 17,115. S&P down 3 at 2,004. Russell 2,000 up $1.26. Nasdaq Composite up a point out here. NDX 100 up 2 points. New York Stock Exchange, the struggling index this morning here off 0.3%, down 35 points. Gold back $3. Silver down 2 pennies. Light sweet crude getting hammered this morning off $1.39. Moving to the upside, you've got multimedia game. We mentioned that they're up 29% here this morning. Tesla up 1%, up $3. Google up about 0.5%. iDream Sky Technology, DSKY, that's up 11% here this morning. Canadian Solar, CSIQ up 6%. You've got Twitter up about 3%. Rackspace Holdings up 4%. To the downside, we've got World. Give me a moment here. World Acceptance Corp. Is that WRLD? Is that GMAC? Is that the old GMAC? That is trading off $7.91, down 10% as we speak. Baidu off about $2. EOG Resources down 2. Digital Ally off $1. GoPro down $1.42 as we speak. Schlumberger, one of the stronger one of the stronger, I'll get it out here, oil stocks inside the energy sector here, giving it up this morning. Let's go take a look at Schlumberger out here. Trading down $1.35 as we speak right now. Why does it, there we go. Okay, now we've got Schlumberger. Now what Schlumberger is actually doing here, couple of things. If we take a look at the trading session here from June 25th, let's put a line across the bottom of the screen out here, and that's at the price level of right around the 106.85 type range. That is where we saw wide price spread, accelerated volume to the upside. Price has pulled back into that area. Now it's pulled back on lighter volume, 7.4 million shares versus 17 million shares. Nonetheless, it's down below its breakout area. And right now, what it's really doing, it's dealing with this swing point here. So the next real key area inside of Schlumberger is going to be the swing point from the trading session of August the 15th. Now there's 5.3 million shares traded that trading session. You saw 7 million shares on September 4th moving into it. On Friday, we saw about 6 million shares. Any close below 105.39, that likely sets up an A to B equals CD to the downside inside of Schlumberger. That would take Schlumberger, which is one of the stronger equities within inside the XLE out here, and it's in the top 10 holding for sure. That would take Schlumberger probably down to about the 94.99 level. And that's if it breaks below this B point. That's a trading session from August 15th to the downside out there. Let's go take a look at some of these stocks here that are popping and dropping. Multimedia game, MGAM. Let's go see what's going on out here. Let's see, is there a buyout or anything? Proposed sale of multimedia game. Okay, so let's go take a look at iDream Technologies, unless these guys are part of a buyout out here as well. Now this looks like this is an IPO. How about that? This is an IPO from August the 7th. Let's take a look at its stock chart. Not really going to be able to tell you where this is going to head to because you simply don't have enough information out here. My screen shows that this was an IPO from August the 7th. Nonetheless, it's trading up nicely. That range on that trading session, 1568 up to 1905. You're trading at $25 as we speak right now. Is there an A to B equals CD pattern? I suppose we can make the case that there probably is. The low point being the IPO date. The B point out here looks like maybe August 27's high, and then the C point down here on September the 4th. The 1-to-1 A to B equals CD. Well, for some reason, it's not showing up. Let me try that one more time out here. Let's come up here, click, 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 and one more. Wow. Okay, not sure what is going on there, so I will not be able to give you what that A to B equals CD pattern is. Sorry about that. We got to the upside, we've got Boeing. It's up about 2% this morning, up $2. Let's go see what Boeing is doing out here. Let me pull this back. We had Boeing complete a 1-to-1 A to B equals CD. The downside, it did that on the trading session of August the 6th. Nice bullish reversal signal on August the 7th out here. Makes a retracement. Let's go take a look at the retracement of that entire pattern out here. See where Boeing had gotten above the 0.382 retracement. Looks like what Boeing may be trying to do here is make an A to B equals CD to the upside. So the key level here inside of Boeing as we take a look at it is going to be that swing from the trading session of August the 26th out there. And that price level is at 129.13. About 2.3 million shares so far that's in that swing point. So far today it's up with 600,000 shares. It's not anywhere near that swing point low, which is at 128.31. You're 126.86. But nonetheless, if you can clear that, then you're looking at A to B equals CD pattern to the upside. I'll try that one more time out here, see if the tool is working or if I've got some other. There we go. So it's working to the upside. If, in fact, Boeing can take that out, then what it's doing, it will go ahead and likely make its route up to about the 134 to 135 level. Ticker symbol there, BA. Right now we've got the Dow is down 7. The S&P is off a point. Boy, that NASDAQ composite is up 5 points, just to some strength out there inside of the NASDAQ. The index that will never die. China Mobile, CMGE, is the ticker symbol. That's up 11% out here this morning. Let's go take a look at what this thing might be doing out here. It does have a high volume-ish low, but it's been tested with light volume. Let's pull this back a little bit further, get a feel for where maybe this is headed to. if we can. So it's up above. Today what it's doing is trying to go ahead and close a gap out here. And this is a gap from the trading session that took place with some volume to the downside on March the 21st. Had 2.2 million shares. That was a lot of volume for this to the downside. On Friday's action, it was moving up into that gap with 1.8 million shares. So moving into it, and that volume was expanding on the move up. So any close above 25.11 today, that goes ahead and it repairs that window, which means that we really won't take a look at it as being support or resistance since it was never, in essence, tested. Now, it closed back below 25.11 today, especially because you had price moving in with some volume behind the move. That would tell you just how strong there is with regard to sellers at that level of 25.11 from that downdraft session of March the 21st. If it can close that window, that means get above that price point. Then what you're likely to see inside ticker symbol CMGE is a move up to about 29.66. In fact, this may have a small A to B equals CD that has been confirmed. Let's see here. You've got two swings. You've got really, you'd use the trading session here from August 26th. And that high is 1979, 630,000 shares out there. So that was passed with volume. So let's go take a look at its A to B equals CD pattern out here. Give me a moment to pull this off. And let's take a look. We're going to use these, the A point, the low from June 20th. Yeah, that's fine. We'll use that as the low. The high out here from August 26th, the C point being the low on August the 29th. So it's already made the 1 to 1.272. So any close inside that, as I say, above that window, it takes it up to, takes really right up to that 29.66 area. That is China Mobile Games and Entertainment out there. CMGE is the ticker symbol. To the downside, let's go take a look at some things that are moving south out here. You've got World Acceptance Corp, WRLD. This thing is moving down with volume here this morning. Let's go. We got to put this back maybe on a weekly chart and get a feel for where this is headed to. So let's do that. Let's take a look at a little bit longer time frame out here. WRLD is the ticker symbol. So it's trading right now into a, well, it's trying to bust a swing point already this week. Let's pull this back. A swing point that it's dealing with. Set of swing points, maybe at about the same price. Let's see here. March 24th, the weekend of March 24th, that low, 71.58. The low, 71.63 on April 28th. That volume was 1.8 million. This volume here, 1.4. We'll go with the volume from March 24th. So the weekly chart says 1.4 million. We've been trading for 13 minutes, and it's got 255,000 shares. So it looks like this is motoring to the downside out here. And on a weekly basis, that A to B equals CD pattern. Then we'll go see if there's any kind of volume or anything down at those levels. What you'd really do is the real A to B equals CD pattern out here is going to take price or suggested price inside World Acceptance Corp would move down to about the 50.18 to 40.28 level. Again, it's a weekly chart that we're taking a look at. Let's see if we've got anything out here volume-wise where it might move down to. Well, in the $50 level, it takes you all the way back into March 14th, but that's not even a swing point with any kind of volume to speak of. If this thing really decides to fall out of bed out here, and so far it has, you're looking at the trading session from May 5th, May 4th, 2009. How about that? That's where you've got volume inside of this equity. We don't say that too often around here, meaning the May of 2009 level, but that is very likely where this thing could head down to. That's at $29.24. Right now, though, trade out at 68 bucks. Let's see. Also to the downside, EOG Resources. EOG is a ticker symbol. Trading down about 2.5%, down about $3. Let's take a look at what this is doing on its daily chart out here. We take a look at EOG. It's trading out at 102.47. It's taking on some swing points to the downside out here. That swing point being the trading session from August 14th, 3.4 million shares. Friday's move was with 3.2 million shares. It rejected that level, but with on too much volume. This morning, 341,000 shares. Looks like this maybe setting up an A to B equals CD to the downside. Now, this also has a little bit of a sign of strength here. So it may find some support. We're talking EOG. That price point, let's draw these across the bottom of the screen out here because it's trading into it right now. There's really two levels out here. The two levels being the gap up day, that sign of strength day from May 6th, and that low is at 101.84. The volume on that move to the upside was 8.5 million shares. So it has been backing down with light volume. On Friday, it was 3.2 million shares. Of course, there's a B point, a swing point out here from August 14th, as when we first took a look at the chart out here. So you've got some competing patterns inside of EOG. Here's the deal. With regard to the swing point that could be taken out with some volume out here, you would really need to see it close below 99.71. You'd really need to see volume of more than 8.5 million shares pick up. This chart here looks a lot like Schlumberger's did. Only the Schlumberger chart had wider price spread and I think even more accelerated volume on its sign of strength. Nonetheless, EOG should be headed down to the what's already hit. Well, let's see, is it hit 101.84? It's hit 102.20. Ought to at least hit 101.84. A close below that, 99.71. That becomes its next stopping point. And if you get volume moving out of this thing today, then you've got the A to B equals CD. And let's go take a look at where that would project price at. That would give us a price projection right around the 95.23 to 91.08 level. Again, ticker symbol EOG. We've got the Zillow trading to the downside out here. Z is the ticker symbol out there. That's trading off about $3, down about 2.5% out here. Looks like Zillow trying to make its way back to a sign of strength. Now, Zillow has an untested high-volume high out there. That's a beauty. So Zillow is one you want to take a look at and be able to buy on a retracement. Now, where's that retracement that we want to go ahead and take a look at it? Well, in the case of Zillow, it had the breakout session was from July the 24th out there, and that price point is $125.60. The volume on that breakout session was 7.7 million shares. 2 days ago, moving back with 1 million shares. Friday, 963. This morning, so far, 140,000 shares out there. Zillow's also moving into a swing point here. So it first ought to, and it's trading inside that, and that is from the trading session of August the 12th. It hit that with 963,000 shares on Friday. If volume picks up to the downside, meaning more than 1.3 million shares, Zillow ought to make its way down into at least the range I'd be looking at is 123.25 to 125.60 out there. If volume starts accelerating to the downside, well, that will be a whole new set of issues out here. That volume that it really needs to move to the downside, I know I can get this out here, is more than 7 million shares. So Zillow right now looks like it's setting up to be a buy in that 125-ish type range out there, especially having that high volume high. So keep an eye on Zillow. That looks like that might be a decent trade setup out there. If we look at Anadarko Petroleum, we've got all these oil equities being hit here this morning. APC is the ticker symbol, down about $3. This thing here is likely going to go target its sign of strength out here, and that was from the trading session of April the 2nd. Now, that is a huge sign of strength. You want to talk about wide-ranging bars on the daily chart? It doesn't get too much better than that. So the top of that ought to hold, which is $100 even Steven. The top of that ought to hold as a support level. You'd love to see Anadarko Petroleum get down there and then see the energy sector start to make moves to the upside out here. If it closes below $100 even, Steven, you're away from it right now. You're at 106.61. Then that brings into play the bottom of that breakout session. And that's all the way down at a price level of $85.95. That's ticker symbol APC. To the upside out here, let's see, percentage-wise, what's the big percentage mover out here that we haven't looked at? Canadian Solar. So we come back from this break. Let's go take a look at Canadian Solar. It's trading up about 6%, up $2.33, trading out at $40.91. Right now, we've got the Dow is off 21 points, S&P down 2, Composite up 9. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 11. S&P is down 2 points. Russell 2000 on the move here this morning. It's up 3 points. NASDAQ Composite up 13. New York Stock Exchange down about, down off about 31 points to the downside out here. But it's got some net advancing issues. Just moved positive out here. Let's take a look at CSIQ, and then let's take a look at the market setup for the day out here. If we take a look at Canadian Solar this morning, popping up, gapping up 1.5 million shares here behind its move. Canadian Solar moving into its swing point from February the 28th. 4 million shares are out at that swing point, so it's moving into that level with volume. The bottom of that swing takes you back into the 40.61 level, so we are trading inside there right now. Now we can see at least a double top formation out here inside of CSIQ, so it's right around that 43.60 level, that double top being the highs that were formed on January 16, 2014. That's out at 43.60. We can see that that level was tagged again back on February 26th, the 27th, and February 28th. February 28th gave you a bit of a reversal signal out here, so we'll see if CSIQ can break through that area. If we pull this back a little bit further out here, we're going to see that this thing has, in essence, been consolidated. Let's take a look at the bottom of the consolidation box out here. The consolidation really began on October 28, 2013. So you're looking at about a $21, $22 consolidation move with inside of CSIQ. If it can take out the 43.60 level, pretty good chance that it's going to want to make its way up into the $64 area. So that is what it is, and it's moving into that swing point with decent volume. It's not all the way up there just yet, meaning to the top of it, but it's moving into the bottom here with some pretty decent volume. And that is on Canadian Solar. Now, let's go set up the market. Let's take a look at a couple things that we want to focus on and pay attention to during the day out here. Let's take a look at the VIX index. Right now, the VIX is traded out at $12.64. Interestingly enough, right at the price point of $12 and shoot, didn't mean to do that. Let me see if I can actually get it. 1272, I believe, is the 50-day exponential moving average. So that's something we're going to want to watch out here, because when price, if the VIX gets above that, it's a sign of a lack of liquidity inside of the market. What we have seen out here over the course of the last 5 trading sessions, that is including today, we've seen this level, the 50-day exponential moving average, get tested on today would be the 4th time out here, 4 out of the last 5 days. It has acted as resistance. If it continues to act as resistance, well, then what you should see is price continue to move higher, meaning stock market price move higher, because if you take a look at the chart down below, that's the S&P 500, and so long as the VIX is under the 50-day exponential moving average, you're going to have a market that's going to move sideways to higher out here. So we'll call 1277 is in essence a level that we want to pay attention to. On Thursday, what we saw inside the New York Stock Exchange, we saw the summation index turn down. It looked like it was the beginning of a change of a trend out there. And then Friday, you had enough advancing issues to move that price oscillator back above zero out here. Now, typically, if you take a look at my chart, and you're looking at the second panel at the bottom of my screen out here. Let me try to... can I get that? There we go. I'm going to go ahead and move that I'm going to make that a little bit wider so that you can take a look at that. Normally, that is the beginning of a change in trend out here. But you see, we only had it for 1 day. So if we continue to see net advancing issues, it was nothing more than a brief momentary pause. Now, the key inside the NYSE is going to be to get above 11,105.84. Folks, it is Marvelous Monday. Thanks, as always, for joining us here at TFNN. If you're off to start your day, have a great day, and I look forward to seeing you bright and early tomorrow morning. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.